I'm happy to see Grab Holdings stock performing well in 2025, as I've had this stock rated as a buy all year long. The company reported quarterly financial results in the recent developments, and I thought that it was interesting news for Grab Holdings stock investors to consider. So I'll go over these results, detail them for you all, and highlight what it could mean for investors in this company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Grab Holdings delivered yet another set of strong results in its most recently completed quarter. On-demand gross merchandise value accelerated to 21% year over year in terms of US dollar growth and 18% in terms of constant currency. So Grab Holdings operates an app similar to what Uber operates, but also includes financial services, and it primarily operates in Southeast Asia. Interestingly, it's also selling its technology, its data, its mapping data to other companies in a lucrative licensing deal that generates high margin revenue for the company. So they're also doing a good job controlling costs, and they delivered their 14th consecutive quarter of adjusted EBITDA growth, while trailing 12-month adjusted free cash flow expanded to $229 million. The performance was powered by product and tech innovations, which drive their ecosystem flywheel faster and enable them to grow across Southeast Asia. Of course, I have Uber rated as the best stock to buy right now, and Grab Holdings is very similar to Uber, and I've been bullish on Grab Holdings for many of the same reasons why I've been bullish on Uber. Consumers have shown a willingness to pay for convenience, and ride sharing and food delivery companies offer great convenience. It saves you so much time. It allows more options for food when you want to eat away from home, or when you want to eat something that you're not cooking yourself and you want to eat something from one of your favorite restaurants, but you don't necessarily want to leave your house. This provides a great option. Also, rideshare, I think, is incredibly convenient for many people, especially if you don't have a family. Going without a car and just going with rideshare without owning a car, I think financially speaking, the last time I made that calculation, it was incredibly favorable for US consumers. I find it will be increasingly favorable for consumers worldwide. Now, consumers worldwide have more options in cheaper transportation compared to the United States. So the growth in these categories might be slower, but the growth in the overall economies in these regions are much faster. So you're getting a bigger tailwind from macroeconomic growth and less of a tailwind because of the substitution benefit of having that option be lower cost. So their financial services business is also growing nicely, with loan disposals across their GrabFin and their digital banks reaching close to $3 billion on an annualized run rate in the second quarter. At the same time, credit risks remain within their risk appetite. So this means they're not taking extra credit risk to make these additional loans, which you can always do as a lender. I've always said there is no shortage of people looking to borrow money. There's never a shortage of people looking to borrow money if you're willing to expand your willingness to lend to lower quality borrowers. But that's not what Grab Holdings is doing. By the way, this highlighted document I made available for my channel members, and you can join my channel for less than $5 a month. Let's go to valuation. Now, I updated my discounted cash flow model for Grab Holdings today, and the intrinsic value per share I calculated is $7.26. The current market price is $6.05. It's trading near its 52-week high, but I still calculate this stock as being undervalued at current market prices, even after applying a margin of safety. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.